But anyway, all right. I love hanging out with you guys. All right. So today, guys, we have a lot of things to go over. Like I said, this is that final day. Everybody's gonna get um the full presentation. But on Monday, we're gonna start separating it into your pay scale. Um, so I want to show you some final things um that you're probably not going to see anymore. Um, but let's start off with this. We also know that our focus should be that interest rate announcement next Thursday, September 18th. And I'm going to explain something to you guys that I've never explained before. And if I did, it was early on, and I got sidetracked of not making that a part of the regular curriculum. So I'm going to explain to some of you guys that you probably never heard. But like I said, I want to make this the most powerful presentation since this is the last one where you're going to see everything. So I'm going to explain exactly how some things work when it comes to um, the the interest rate announcement and the supply chain. But before we get to that, let's find our sentiment. I want to reiterate this to you that this should be a part of your daily or your weekly analysis as you have your different AIs. But even if you're not even using AI, you still should probably factor this in. So I'm going to give you two examples. I'm going to go to Microsoft Copilot. You guys know that I have this prompt. If you do not have this prompt, I will put it in the university, but it's literally just to get the sentiment. And we use the sentiment AIs, the Copilot, the Grok. You might be able to go out and find some more. Any of those assistants, use these assistants if you're going to use anything dealing with sentiment in the markets. Now, it's up to you if you want to use DeepSeek. I think DeepSeek is overkill, and I think I might just add DeepSeek into the analysis. It's just too powerful to leave at that level. But like I said, I'm going to be redoing the spreadsheet um, over the weekend, so that's probably one of the changes I'm going to make. But I'm using, and that's another thing. I probably want to take Grok and put it in here as well. So, like I said, I'm gonna rearrange some things, but we're gonna use the Grok and we're gonna use the Copilot. You might want to use Nova. You might even want to use the Meta. I might even add Meta in here. I'm gonna add Meta back in with the assistants, and it's strictly just to use as a sentiment analysis, right? So let me go ahead and show you the two that I'm using. I'm using Copilot. You guys have seen me do this last week where I put in the prompt where I want news articles, right? I want to know the news articles. Now, this time, before I was doing, if you remember, I did 24 hours, right? I did 24 hours last time. But this time, there's the 24 hours. So this time I did 5 days. I want to know the sentiment for the whole week, 5 business days. So it doesn't matter where you are. If you're doing it on a Wednesday, it's going to do it from Wednesday to Wednesday. So do business days. And it'll give you the business days, not just the weekends. Now you can also do just 7 days period, because there might be things that happen over the weekend. So I'm giving you the options of how to create the prompt. But like I said, if you need this sentiment prompt, let me know. I'll put it in the university. So now here we are, right? We got that stimulus. This is a part of the prompt. We want stimulus that the institutions are posting on the news. Bloomberg, Wall Street Journal, CNBC. Let's go over this very quickly. Larry Summers warns of a credible crisis as Trump pushes to remove. Uh, Now, is this the right one? Yeah, 5 business days. So that's still a factor. Trump is still trying to get Lisa Cook out of there. Analysts fear this could destabilize central bank independence. And I'm going to tell you, let me pause right here, guys. This is on one of those levels where sometimes you don't realize the implications of the things you're doing because Trump is so focused on taking control of that central bank mechanism that he doesn't know or doesn't care about the fallout that's coming. Like they're literally telling you that it might destabilize the central bank independence. And I've showed you guys that even going through history, like case studies of other presidents that did the similar thing. And I brought up um, Nixon did the same thing. and the whole U.S. economy went into a recession afterwards. But I want to bring this up, and we'll talk a little bit. Maybe we can fit it into our discussion a little bit today. Is that we got the red hat that decided to call immigration on that Korean company. Does everybody know about this?
Yeah, I heard about that.
So this
Yeah,
woman
Hyundai.
decides, oh,
Hyundai. Yep.
she's gonna be immigration police. She realizes in her neighborhood, she sees all these foreigners in her neighborhood. Oh, this is unacceptable. She calls ICE on this factory in Georgia. All right. ICE comes out, arrests 350, I think it was actually close to 450 Korean workers. Pay attention. They go to ICE facility. Here's how it worked. Because I showed you guys the map. If you guys need me to show you that again, remember I tell you that you got to view each individual state as a country sometimes, because they're making individual deals with other countries. Our deals are not made on a national level. Every state is making deals with different countries. So Georgia made a deal with South Korea, to bring those workers over to create a plant, to create a factory. And so they brought in these. Now, keep in mind, in Korea, and if you watch anything of Korean drama, and I'll give you a homework assignment. Give me a second. Let me find my chat. Oh, I can just show it to you. If you go to Netflix, I'll give you a homework assignment. Hierarchy. I just finished this yesterday. This is a Korean TV show that goes into, this is a real thing that happens in South Korea. There are about 5 families. It may be 6, it may be 7, but I do know that in previous history, there are 5 main families that control everything in South Korea. Them and their kids, they have a hierarchy, and everybody either wants to be working for those 5 families and their companies. They want to go to school with their kids, so that they can rub elbows, and that's what this TV show does. It shows you that hierarchy on even parents are using connections with their kids at their school to kind of introduce them to their parents of these elite families. So understand this: when those 450 Korean workers came over here, they were of the elite in South Korea. So as they were viewed as foreign, low-end people here, they sent the best of their best. And the best of the best of Korean society got hit by an ICE raid. Does everybody
Yep.
understand this?
Yes, sir.
So when Korea found out what they did, and I can prove it to you that they were elite, they sent a private jet to get all of their workers. They went to ICE and said, we want all of them back. They loaded every single one of their Korean workers back on those private planes, took them back to Korea, and they said, sorry, we're done. We're not going to finish your plant. Because here was the actual way it worked. Those workers were installing Korean machinery that was in Korean language. So the American workers, couldn't use the machines because they were in another language. So this is how they've always done it. They bring over the Korean workers to train the Americans on how to use the machinery. So that one woman cost Georgia billions of dollars because they're not going to finish the plant. And remember, there's a hierarchy. And I believe that they were with Samsung or LG. These are all the 5 families of Samsung, LG. There's like 5 of them. Huang. There are 5 main corporations that control everything in South Korea. And guess what? They're all friends. They're a part of the hierarchy. So if you pissed off one of the family, you pissed off all 5 of them. So now none of those hierarchies are going to come over to America anymore. That one woman, in her hatred, has cost the American economy and Georgia billions. Does everybody understand this?
So crazy, man.
This is the ripple effect. So if you want to get an idea, you can look up the articles, and you can even look up. There's a Chinese version. I can't remember the name. It's kind of a reality show about one of the high end people in China, because China has another version of it where they have this elite family in China as well. But they did a reality show on one of the daughters, a crazy rich Asian or something like that. So you can look at both of those, but I know that this show is going to give you a very good idea on how that hierarchy works if you do want to get an idea of it. But yeah, literally, one person's phone call, one person's hate has cost millions of people in Georgia American jobs. Because if she was really doing it for the right reason, we want, because, and people are still talking about, oh, we want American jobs. One phone call. Now, let me give you the teachable moment. Because what did I tell you yesterday? Your brain is going to give you an answer no matter what question you ask. And it's based on your knowledge on the topic. And because she was not versed in how that whole situation worked, because she was limited in her understanding, her brain gave her an answer based on her learning hate. Her brain gave her the answer: call ICE. But because she didn't know economics, because she didn't know business, her limited understanding cost everyone else millions and billions of dollars. American jobs gone, even in the future. So why am I bringing that up? The second teachable moment. That the same thing can happen with this. When your hate, when the government and different people are with their hate and the policies that they got in, where they're attacking a certain group, look at the farmers. They attacked at the immigrants, and now the farmers are going bankrupt. We see it on multiple levels. So I promise you, if this continues with the whole central bank thing, we're looking for that hate to do the same thing, even more horrible, more damage to the U.S. economy. Wall Street Journal: Fed has room to cut deeper if inflation stays tame, says strategist Imans. Traders are pricing in multiple cuts through year end. Multiple cuts in year end, which I already told you. That once we get that first rate cut on the 18th next week, we're probably going to get two more. Between September, October, November, December, we're probably going to get two more. And like I said, guys, that's just steamrolling a strong economy for next year. Now, I always give the caveat, because this administration is going to do certain things, which we just mentioned, that's going to try to undercut. Now, let me give you another example of the strongest bull market. Did you guys know that Oracle just increased 30%? Oracle made a major move.
I saw that.
New all-time high. Did you guys hear about this?
Yes, I did see that. I did see that.
Tops 900 billion. I believe the owner of Oracle is now the richest man in the world. 30% increase within a 24, 48 hour. Now, keep in mind, Oracle was originally one of the .com. So they finally, remember, and it really shows you how much the .com was overpriced. Because they're saying that going up to where they are now, they finally came above their 1992 valuation from the .com. That's crazy. But Oracle is going to be the next. Remember, this is my prediction, guys. I says, after you see, let me reiterate, because I get goosebumps when I do this. I told you that once the original Mag 7 go into the 4 trillion, which is where NVIDIA is, you're going to start seeing other high-end corporations come into the Mag 7. And that's what you're seeing. NVIDIA went into the $4 trillion area, and now you see Oracle coming into the Mag 7. But this proves that this is the strongest bull market in history. Are you with me? despite the tariffs, despite all of the things that are happening in our economy, the market is still giving record highs on the indexes, on the oil and dollar, and on the Mag 7s. So once again, what do you think is going to happen when we get multiple rate cuts? Because we went through this all this week with the CPI and the PPI. We know this now. We should. We should know the causal sequence that interest rate is the first. Remember I said when anybody mentions inflation, your visual is credit card. So you should know that sequence now, man, that the interest rates lower on the credit line. They're able to buy more labor, more raw materials, more transportation. And what do you think is going to happen? Because those corporations are going to now stimulate the economy, economic value. Remember, we're value hunters. And one of the things that we look for is economic value, where those corporations are stimulating our economy, stimulating growth. So what's going to happen when we get multiple rate cuts? What's going to happen? Because here's the other thing that I saw sometime this week that because it's another prediction that I made, that when the T virus goes away, Trump is not going to just announce that it didn't work. He's just going to stop talking about it. He's going to stop negotiating with it. And I saw another video that mentioned Trump backs away from tariffs. Let me see if I can find an article or video on this. Here it is. Donald Trump has not significantly been back away from tariffs. Instead, the campaign pledge. But this is what I mean, guys, and this is why I want you to pay attention, because there's a difference between saying it and implementing it. And like I said, the most AIs are only going to give you something from the news because they're not advertising it. Here it is. 3 hours ago, Trump has suggested that the U.S. may have to unwind existing trade deals. Believe me, he's backing away from the tariffs. You haven't heard it as much because in the beginning, we heard it every day, every week. Now he only mentions it to shock the economy and shock the news and shock the stock market. Here it is. Trump backs down on most tariffs for 90 days. But after the 90 days is over, he's not going to implement a new one. In stunning U-turn, this is August 9th. In stunning U-turn, Trump walks back some tariffs. He is backing off of tariffs. So once again, let's add that to our analysis. Because if we're getting multiple rate cuts and you're getting rid of the inflationary mechanism that was causing the market to fall, this is the same thing that's happening with that correction, the pressure, right? When the market was falling, it was pressure. But remember the rubber band. I gave you the analogy of the rubber band. So when you get rid of the tariffs and you get rid of the interest rates, it's going to snap back. And we're going to go into 2026. And 2026 is probably going to give us that strong market that I thought 2025 would. Does this make sense?
Yes, sir.
Jim Cramer reacts to weak job reports, saying even lower rates can help things, which we know that. Reuters, Wall Street ends down as traders focus on Nvidia and Fed after last week's rally. Tech valuations remain under scrutiny. That's all echo. Japan's Ninja Stealth rally, I'm going to look that up, draws global investors, signaling a shift in sentiment toward Asian equities. Let's find out what this is. Look up everything that you don't know. Japanese Ninja Stealth rally refers to the quiet yet strong performance of the Japanese stock market in 2025, which has seen the Nikkei 225 and Topix indices rise significantly. The rally has occurred without the major headlines and investor attention that often accompany big market moves, leading to the ninja stealth comparison. So this is just something that we may want to monitor. It may be something that we may want to factor, because let me ask you guys, is Japan one of the 6 currencies for the US dollar?
Yes.
So like I said, we find out where it fits into our analysis, and we may want to watch Japan. Watch there. Now, here's something else. I told you that there are versions of the Dow Jones, and I've shown you my spreadsheet where the Nikkei is their version of the Dow Jones. So you also may want to watch the Nikkei, because that might have been another catalyst on why the Dow Jones was rising. As the Nikkei was rising up, it has a major factor in the Dow Jones here in the US. But these are the small little details that we may not see every day. These are the small little things. Remember, as they say, everything's built into the price. No, it's not. You think you know what's happening, but this may be an underlying factor that we didn't even know about when it comes to why our indices, our Dow Jones, our S&P, and our NASDAQ has been rallying, giving new highs, new record highs. It might be an impact on Nikkei. And think about that. There may be other foreign indices that might be incoming transmission, that might be pressuring our domestic indices. So this might be a rabbit hole that you may want to go down. But like I said, we look up every terminology to make sure we know what it means. So right, so that's our stimulus, so we know exactly what's happening and what people are talking about in the news. All right, and then we got the economic indicators. The S&P 500 hits new highs, which we've seen multiple of that over the last couple of weeks. NVIDIA earnings loom. Analysts debate whether the signal exhaustion. That's all echo. Barron's, markets teeter on job miss, but investors remain cautiously optimistic. Valuations are borderline stratospheric. So once again, value is what we're looking for. Value is increasing, and this is before. Think about that. That Oracle move came before the interest rate announcement. So if you have any extra money, imagine you buy Oracle before that interest rate announcement. What do you think Oracle's going to do after that interest rate announcement, after the next 3 interest rates announcement? We know that Oracle is going to come into the Mag 7 in 2025 based on the interest rates that we're going to get at the last part of this year. Does everybody agree?
Yes.
Yes, absolutely.
So investors' appetite for pre-IPO AI firms is pushing valuations sky high, reflecting speculative optimism. I don't get into the pre-IPO. That's just very, very dangerous. Very, very uncertain is the word I'm looking for. But what we can take from it is that it's sentiment. Because people, here's the analysis of this. When the market is uncertain, people are not going to expand into risky investments. So just to see people are expanding out into pre-IPO, into tech startups, it lets you know the confidence level that they have. Because 6 months ago, people were not expanding into risky investments. They were going into safe havens. So it lets you know the sentiment on which is what this is. This is letting us know the sentiment on the institutional level. Does everybody understand that?
Yes.
So now we see the reaction of the social media, which this is where we find the sentiment. Markets are ignoring Powell's strongest rate cut signal yet. This is either confidence or complacency. This is very redundant on what we already did, but they're still trying to, they're still going with the same echoes, the same what's the word I'm looking for? They're still going with the same bearish sentiment, trying to get people to not recognize the bullish sentiment of the markets. Charles Schwab, NVIDIA's earnings miss is a reminder that tech valuations are still fragile. Trump's Fed takeover attempt isn't rocking markets yet, but bond traders are quietly panicking. They know what's going to happen if they lose the independence of those interest rates. You're going to see the bond market fall, if not crash. And believe me, people are whispering in Donald Trump's ear, you got to be cautious. We saw what happened earlier this year. The bond market almost crashed because of the uncertainty. So we can watch that as well. And I even said that yesterday, that when they talk about interest rates, the very first thing they're going to talk about is bonds and yields, because that's what everything's based on. All right, LinkedIn, the Fed's credibility is under siege. Rate cuts may come, but at what institutional cost? It's affecting the sentiment of the markets. The Fed is under attack. People recognize that it is. BlackRock strategists, we're seeing a bifurcation. Don't worry, I'm going to look it up. Even I don't know what this means. I've heard of it before. The division of something into two branches. All right, so are they saying that the Fed is going into bifurcation? So let me do this. I'm going to copy the whole thing. Oh, no. Main Street, Wall Street. Got you. Main Street and Wall Street are the two bifurcation. Main Street is cautious. Wall Street is euphoric. For those of you that don't know what Main Street is, hold on. I'm just proving to you that you need to look up everything at that moment. The average American investor. And Wall Street is a high-end investor. I'm showing you what to do, guys. I'm showing you the work product. Do not put it in your notes. So I'll look that up later. Don't pass over it. If you see terminology you don't understand, look it up. All right. But some of these things you may want to even add to your models. You may want to put it in your notes. You may want to copy the whole thing out. Copy the whole thing out and put it in your weekly analysis. All right. TikTok, explaining why Powell's speech means your mortgage rate might drop next month. I know this is echo. They're just trying to get you to this. They got this from some kind of an advertisement or something, or click or some kind of clickbait. Market Maven, NVIDIA's earnings tank the S&P. Here's what that means for you. Another echo. They're just looking for clickbait. Don't fall for it. NVIDIA. This is a EFT. The SPY is an EFT. I'm sorry, ETF. I apologize. And then you have the Tesla. So it's saying retail traders are bullish on rate cuts, but weary of tech volatility. Midi post reference Powell's pivot and Trump's chaos. So I'm telling you, whether you are low end or high end, everybody is watching this battle between Trump and Powell. And they know what it means. They know the outcome. They know the domino effect of what's going to happen. So like I said, you can do this weekly. You can do this daily to kind of find the sentiment, figure out which pieces you need. And then the same thing, I want to show you very quickly. I'm not going to go into the Grok, but I did the same thing with Grok, but I did it for the Mag 7. And I did it over 14 days. So now you can look at the same thing and see what's happening with your finger on the pulse of the Mag 7. And there's something that the Reuters has called the Magnificent 7 Monitor. So you can also go through this. So if you want this prompt as well, I can put this in where you can monitor the Mag 7 as well for sentiment, for echoes and for sentiment.
Yep.
But I just need you to understand the two separations. Inside the university, we're only focused on the economic events, but I did want to at least show you that little extra piece if you guys are monitoring and looking to trade anything in the Magnificent Seven in the future. You can come up with the same little prompt for it, right? I'm not going to get too much into that. Let me go ahead and cancel this out. What I want to do today is keep in mind, like if we were going through the normal schedule, we are showing you the economics. That's basically what this is. We're showing you causal sequence. We're showing you cause and effect. We're showing you economics. We're showing you supply chain. So we're still doing the economic language. We're still, showing you how geopolitics. We're showing you that's what this is all about. So I'm not out of schedule of what we would normally do, but because we don't have an actual event, this is what we're doing. So now let's go to our schedule. All right. So that would have been from 7:30 to 8 o'clock. We're past the 8 o'clock. We're in the 8:15. No problem. Let me go to the schedule. Let's see what we have coming in next week. Next week on Monday, we don't have anything. Next Tuesday, I can probably do the retail sales. Looking for anything else at 10. We have housing at 10 and retail inventories. But I think I'm going to focus on that retail sales at 8 o'clock. Let me look at the rest of the week before I make a final decision. We definitely have housing starts. We're going to definitely do this on Wednesday. On Thursday, we have initial job claims. I may or may not do that. We have nothing on Friday. Okay, so here's what we have. We have, and you guys let me know, we got 3 options. We have retail sales, which is not that strong. I'm telling you right now, retail sales by itself is not that strong unless it's paired up with something else around that time. So let me show you on the schedule. So retail sales is consumer. So if retail sales was coming out the same time as the CPI or the PCE, then it would be relevant. But if the retail sales is by itself, it's not gonna raise the market as well. So we're probably not gonna do the retail sales because there's nothing around it that's gonna make it some kind of a relevancy. It's not a primary. So I think next week we're gonna do Wednesday and Thursday. We're gonna do the housing starts on Wednesday, and we're gonna do the initial job claims on Thursday. Does that make sense?
Aaron, question for you.
Go ahead.
Yeah.
Can you hear me? Okay.
Yeah.
When I looked at the schedule on the spreadsheet, there was something on there. I think it was in the blue column. It says MTIS, which was like manufacturing, trade, inventory,
Yeah.
sales or something. Is that one that we're gonna do? Yeah, MTIS.
This
Are we gonna
this is
trade
in,
those?
this is inventory. So you have the Michigan trade inventory, you have the wholesale inventory, and you have the retail inventory.
Yeah.
The whole thing is inventories. But
So are we gonna trade that on the 16th? Because that's one 9/16 you
was it
have
was it
listed
the
in.
Michigan or was it the other two?
No, it's not Michigan. It's manufacturing, trade,
And that's-
inventory and sales.
And that's what I mean. I usually try to only trade the main ones, which is
Okay.
why I created these 9. Give me a second. Yeah, so I wanted to. I try to only trade the original 9. I will trade. There's an echo, Abena. I was wondering what that noise was. It's me. You
Okay,
turn your
hold on,
mic
sorry.
off. No, you good.
Yes, hold on. Yep.
It's not. It's no problem. I was wondering what the sound was. It's just my echo. So yeah, I mainly try to trade these. So if once again the same thing that I just described with this, that the retail sales is by itself. So because of that, like I'll give you an example. If the retail sales was this week that came out with the consumer price index, we would have looked at it.
Okay.
But because it's next week and it's after the PPI and the CPI, then it's not relevant anymore. So so here's what we'll do with this. If the wholesale inventories and the retail inventories are by itself, if they're isolated, then no, because it's not going to give us a major move.
Okay, got you.
But
Yep.
if it's happening very close to the MTIS, then yes, we may. And I'll give you another example. Maybe we have a short week. Maybe we have a short week, and that's the reason why I said we got 3 on the schedule. We only want to choose the best of the best, and this is that first stage on your selection is the first stage of high probability, high momentum. You got to choose trades that will give you high momentum.
Got it.
And if you're choosing trades that don't give it to you, especially if it's isolated, it's definitely not going to give it to you.
Right.
But
That's what I was wondering is because we never really had focused, or I never really heard you talk about that. So I was wondering, like, if I've never really watched it, so I was thinking, is that something that is major,
Yeah.
or that has that momentum? But it doesn't sound, unless it's near the CPI
There
and
you go.
PPI.
If it and it doesn't have to be next to something in its own category. Like I said, we've already finished the major reports of the CPI and PPI. Once again, if these metrics came before that PPI and CPI, then we're showing how it's building up. It may be more relevant. People are using it as an indicator on what's going to happen, that type of thing. And I don't think that the inventories is going to have a major impact on the labor. I'm sorry, on the interest rates next week, because it's definitely not going to overpower that PPI and CPI.
Okay.
So it still doesn't become a major factor. Does this make sense to everybody?
Yes, sir. Yeah, but I did want to work on the housing, maybe work on the framework and dip our toe in the housing.
Do we have housing next week? Yeah, we got the housing report on Tuesday. So we'll definitely do this on Tuesday. We'll do the initial job claims on Wednesday, and that'll be it. So we're back on TikTok.
Wait, Wednesday is FOMC for sure.
Oh, you're right. I'm sorry. Hold on. You're right. Yeah, I'm so sorry.
Yep.
That's but that's at 2:00.
Yes.
So we can still go into the Zoom.
So housing starts is in the morning.
Yeah. So that's what we'll do. We'll have a dual trade. We'll talk about the housing labor, especially at 8:30. But after the 8:30 is over, and keep in mind we have time next week. Even on TikTok, we can do some analysis on the Wednesday trade. So we'll be able to analyze both of these Monday and Tuesday on TikTok. But yeah, you are right. We have that interest rate announcement next I thought it was Thursday though. Hold on. The 18th.
You know what, Aaron? On the spreadsheet, it shows it on Tuesday, but it's really Wednesday because Wednesdays are always FOMC.
Exactly.
Yeah.
So
that's why you're probably thinking that. Yeah.
Exactly. So let me give you this as well. That Fed event is actually a 2-day event.
Okay.
A lot of people don't know this. It's a 2-day event. So they're showing on the calendar as it being on Wednesday. But the actual event that we're looking at, because here's something else, is happening at 2:00. So we want to see it affect the market the following day. Does this make sense? We can try to trade that 2:00. Let me see. Let me see it.
Yeah, usually because the day that he comes out with the speech, that's the day that I see the market always, moving in conjunction with what he said.
In September. Give me a second.
It should be on a Wednesday at 2.
But I'm telling you, it's a 2-day trade. If it's at 2:00, it's a 2-day trade. You can trade it at the 2, but you can also trade it. You can also trade the sentiment rolling over, because like I said, it's going to roll over the entire global economy. Every central bank is going to monitor it, and then it rolls back over with enough sentiment, which I know it is, and you can trade it again at 8:30 and 9:30 in the morning. But let me make sure that it's actually gonna be Thursday in September. No, I'm sorry. Not Powell. Let me put in the Fed. The Fed rates announcements. Oh, it is Wednesday, the September. So let me change that on the calendar. I have it for the 16th. So now it'll show up. All right, so let's make sure. Yeah, Fed 17th. I don't know why I had it for the 16th. Well, you know what? I do know why. Because I had to enter them manually. But no problem. Mistakes are made. All right, so definitely on the 17th. But like I said, guys, we can trade it at the 2 o'clock. And I know it's going to have a lot of momentum. So it's going to travel around the global markets. And then the following morning at 8:30. So I'll tell you what we'll do. Let's not worry about retail. Remember I said you want to put all your focus on this one trade. So we're not trading anything else next week. We're going to trade the Fed on Wednesday, and then we're going to come back into Zoom on Thursday and trade that morning momentum. Does that make sense?
Yes, sir.
Did I lose anybody?
No, yeah, makes sense.
Anybody else? The silence makes me think I lost you guys.
No, yeah, I got you. Yep.
Okay.
Makes sense. Mm-hmm.
So that's what we'll do. We're gonna do Wednesday and Thursday. Wednesday is the actual event at 2 o'clock. We're gonna come in. We're gonna look over the building and housing that morning at 8:30. But we're also gonna be preparing, because keep in mind, especially the fraternity, we're gonna go past into the 9:30, so we'll be able to actually go into this using the framework to kind of make sure that we have our high probability. But what we're gonna do also is we're gonna return back at that Thursday, and then we're going to try to see if we can get two more trades at the 8:30 future opening, and we're going to try to see what happens at the 9:30 opening up the opening bell. And I'm pretty sure the momentum is going to stay strong. So that's our schedule for tomorrow, Wednesday and Thursday. So the rest of the days we're on TikTok. Monday, Tuesday, and Friday. We'll be back. Well, no, Friday I'm taking off. That's my birthday. So yeah, so Monday, Tuesday we're on TikTok. Wednesday and Thursday we're on Zoom in the university. All right, so we'll leave it there. Let's go ahead and get rid of the sentiment. Get rid of that. So where we at? We're at 8:30. That's I wanted to do the spreadsheet. Let's go ahead and enter those two into our spreadsheet next week. Well, it's actually only one thing, right? We just got to enter in the Fed announcement. Well, no, we're gonna do a dual. So let's do the Fed announcement on Wednesday and then the dual on Thursday. And it might be 3. Remember, we have the 2 o'clock, and actually it might be 4, because we have the housing at 8:30 Wednesday morning. We have the Fed announcement at 2 o'clock. And then the following Thursday, we got the 8:30 reaction to the Fed, and then the 9:30 reaction to the Fed. So let's enter in these 4 trades. We'll go to our fixed, going down to the 17th. All right, there's our Fed, 17th, 2 o'clock. How do I change it to 2 p.m.? Oh, I gotta use military time. 14. Does everybody see that? Let me see if there's a way to change it to regular time.
Yeah.
I'm gonna Google it. How do I change time to, how do I change time from military to regular in Google Sheets? To change military to 12, select the cell, go to format, number, custom. There we go. Format, number, custom. All the way down at the bottom. Custom, date, and time. Let's try that again. Format, numbers. Yeah, that's the right one. Think this is the one. Yeah, see PM? Yeah, it's giving me the PM. Perfect. Apply. There we go. So yeah, we got 8:30, the time event. We still only want to be about 5 minutes in this trade. I'm gonna put in dual. Well, let me see how to work this out because I believe it's a single trade because the other two the following day are not the dual, right? So when I do this tomorrow, that's a dual trade. The 8:30 and 9:30 tomorrow is the dual trade. This is a single trade. So no assets to liquidate. We got to go big on this one, guys. 5%, $5,000. What do you guys think? Should we go up our contract ladder?
The YM?
I would.
That's what I'm thinking. I'm loving the way you guys think. That's what I'm talking about. All right, so the value of the contract is $5. Go big or go home. How many, what's the quantity of contracts we got? We're sitting on $100,000, guys, so we have the room.
So instead of 10, well, it would be 20.
This is the quantity of contracts. We haven't got to points yet. But remember, this is one of those huge trades, those yearly annual trades.
20 contract?
Boy, y'all trying to make money on this one. All right, so our total investment is $1,000. We're going to leave it there. So we'll come back later and do the routine, a little bit next week. Now, technically, with it being next Wednesday and this being Friday, we should already have the routine kind of done. We should already have done our affirmation and our schedule. All right, but we'll save that for TikTok. That's actually perfect. We're gonna do the scheduling for this on TikTok on Monday. We'll probably go through both of these on Monday. Does that make sense? Now I can show you the notifications. So we'll do that on TikTok, both of these. And we might even go a little bit into the whole thing. We may do the whole routine on Monday because that's the only announcement we're doing. So let's go over the entire routine on Monday for this trade. But we're going to leave it there. Now we got 3 more to enter. Now the other is a fluid for that same day. That morning we have the is a housing. Let's go back and look at it. That morning for 8:30 we have the building permits and housing starts. So no, housing starts should be fixed. Yeah, housing starts right there. So we're gonna put this one for 8:30. Beautiful. All right, 5 minutes on this trade. Single trade, no liquidation. I'm gonna do a minimum because this is an extra. So we'll do the bare minimum of this one.
Yet, so we're not really sure yet.
Now I want to give you this as well, guys. this could possibly be a dual trade for the 8:30 and 9:30. Because if we get a huge spike, because this is the day of the Fed, so there may be a lot of sentiment, there may be a lot of people expectation. So people might use the housing starts, but they're really trading the sentiment of the Fed report later that day. Does that make sense?
So does that basically give us another opportunity then?
Yes.
Yeah. Okay. Wow. That's awesome.
And here's the protection in place. We can look at the 8:30 to see if we get the huge spike. We're going to trade it bare minimum. But if we get, and I'm going to use your reference, have been probably for a while now, because you did it last week. You ran to the markets, you used that 8:30 indicator to know that you're going to get that high momentum at 9:30, and you get that opportunity. So we're going to trade the 8:30 on the metrics. But if that thing spikes, we can guarantee, not guarantee, but we have a high probability for that 9:30 that it's going to give us our strong momentum and our perfect trade in the markets, out the markets, out. So we get two more opportunities to make money at 8:30 and 9:30 as a dual trade because of the sentiment of the Fed report at 2. And if it doesn't give it to us, no problem. If we lose money at the 8:30, no problem. We know that 2 o'clock is going to make up for it. But we're still going to do bare minimum. We're still going to do let's do bare minimum 10 contracts. And then we'll leave that there. So now I want to do a dual trade for this at 9:30. So 9:17, dual trade. $9:17, 2025. We're trading the housing starts. This is at the 9:30 bell. 5 minutes. And to be honest with you, hold on. This is a dual, but here we got to put dual. We're doing a dual trade at that 9:30. So there's our dual. And now on the dual, we have the housing starts to let us know that it's a dual from the same day. No assets to liquidate. We're going to do the same $1,000. Now, I'm going to put in 1,000 now, guys, because we don't know the sentiment, right? We don't know the sentiment. If you get that strong sentiment at 9:30, you can always increase. But as you're planning it out, because we don't know, we're going to leave it at the $1,000 minimum. But on the fly, you can upgrade this if you get a stronger confirmation. All right, so 20, no, I'm sorry. We're doing 10 on this. And then we'll leave it there. We'll look over the routine a little bit later. And I'll tell you what, guys, that's your homework. Fill this out, and you should be going over the routine over the weekend. You got 4 trades that you got to go over. Like I said, when I come on Monday, you should not be doing it with me. Take the weekend, and you got 4 trades that you have to go through the routine. Set everything up. All right, so that's number 2. Now the following day, we have these are also dual trades. So here, well, no, the fluid is going to be the 9:17. We'll do one fluid at the 8:30. We're going to choose the Fed announcement though, so we know that it's the momentum. So there's the Fed. We're doing the 8:30. Five minutes. This is going to be a dual because we're going to do it again at 9:30. No liquidation. Once again, I don't know what it's going to give. Now, I'll tell you something. If you watch the Fed announcement the previous day, right? The previous day at 2 o'clock, you get to see how powerful that Fed announcement is. Plus, it's called pre-market analysis. So if we're waking up at 7:30, which I'm going to take you through my full pre-market regiment, because we want to see the overnight momentum. You guys get to see me do my default pre-market analysis. We're going to monitor the overnight movement and see how that Fed has affected every other global market around the world. So that'll let us know when we come in the following day, you may want to change this. You can either change it after the 2 o'clock, or you may want to wait that pre-market and do a last minute change on what your investment is going to be. Does that make sense?
Yes.
But for now, we'll leave it here. And now we have that trade in. Now we want to do the other dual trade on the dual ledger. Once again, 917. And I wonder if I just put in 917, will it automatically put in the 2025? Let's see. It does. Awesome. So you don't have to put in the 2025, guys. Just put in the actual 917. It'll finish it. So we're doing the Fed again. This is the 930. This is a dual trade as well. No liquidation. Same thing here, guys. If you get that strong momentum, if you get strong, crazy momentum at the 830, it is an indicator that you can raise your investment, raise your position for the 930. Does that make sense?
Yes.
And there's multiple ways, right? There are 4 different ways that we can raise that. We can increase our allocation. We can we can go up the contract ladder. We can increase the amount of contracts, and we can spread out our points where we're not just going for 10, we can go for 20 points, 30 points. So you got 4 different options on how you can increase your position on anything that you have a high confidence on. So there's our 4 trades. Does anybody have any questions? All right, so this would be the place that I would ask all of the university students to leave. Because it's at my discretion. Like it's possible I may let some of the visitors stay. If I'm running behind on my schedule, like I was today, I don't mind letting some of the visitors stay. I don't mind letting some of the Cheetah students stay, but that's at my discretion, depending on where I am. If I don't think that I've given enough value, I have no problem with them staying. But I do know one thing, whether the visitors or the Cheetah students stay, everybody's leaving at 8:45. I only want my fraternity students in the room after 8:45, 8:50. Because I will not be giving away the AI of framework and models. I understand the value and the power that we are building. So, like I said, this would be the time that I would ask everybody to leave, and now we're doing framework. So that's what we're working on now. Let's go to our framework, guys. We've got about 34, I would say about 30 minutes. Do you guys have any questions on anything with framework? Because like I said, this is the last class. So if you are a regular Cheetah student, if you are going to be a part of only the simulation, this will be the time you would ask questions. All right, so let us give me a second. Okay, got that. So here's what we're gonna do. Oh, I wanted to explain something to you guys. This is a perfect time to do that. Remember, I said I want to give you something special. So let me find a way to explain this properly. I want you guys to think about your stop loss. Think about your stop loss. When you put that stop loss in, the strategy, because there is a science, there is a strategy, there is a rhythm of finding your correct stop loss. You got to gauge the market volatility. You got to gauge the range. You know, you got to figure out where the institutional traps may be, and you got to position your stop loss accordingly to where, you know, getting stopped out, not getting stopped out, that type of thing. And depending on where you put your stop loss, pay attention, depending on where you put that stop loss is how much money you're going to lose. Let me give you an example. And I think I should show, let's go to the charts. This is a perfect time to show you the charts. So let's go to TradingView. Let's give you the visual. I'm going to teach you guys something that I haven't taught in probably years. So let's go here to the MYM, and I want to show you this. Pay attention. So if we are, and I'm just going to choose an area. If we are, this is all aftermarket. Do we have any white area? Yeah, here we go. Hello, give me a 1 day. There we go. So if this is the price action that we're working with, all right, we're coming in at the very beginning of the day. Let me zoom in. We're coming in at the very end of the day. I'm sorry, the very beginning of the day. And we want to make sure that the markets are not going to turn around. And we saw that on the trade. Was that Wednesday or was that yesterday? Was that Wednesday that we showed you where the trap, the stop hunting?
That was yesterday, I think.
Yeah, that was yesterday.
Okay, that was yesterday. So here, pay attention, because I'm going to blow your mind. And the reason why I'm doing this, guys, this is something that I would teach in one-on-one. You're getting something that I would only teach in one-on-one. So pay attention. Your job as a low-end trader, we're not institutions. We don't have millions of dollars. We don't have capital. We don't have leverage to move the markets. So we're putting our position in just at our low-end billing. We don't have any power. We don't have any effect, any influence. So we're calculating and strategizing our stop loss based on the institutions having the power. And we're trying to adjust to what they're going to do, how they're going to influence. Watch this. And you guys understand, if you have put in a simulation or you traded real, you know what that feels like to try to, where do I put my stop loss? And you know that when the market falls back on your stop loss, if it's 5 points, you might have lost $50. If you put it back 100 points, you may have lost $500. Are you with me?
Yep. Mm-hmm.
Depending on how far back you put your stop loss is the amount of money you're going to lose on that trade.
Yep.
Check this out. The institutions are constantly calculating a stop loss trap. So they have to put their stop loss trap at a certain place. Watch this. Here it is. I'm going to bring it home. They're calculating, because they have to calculate how much capital they're going to dump into the markets to control it. They're shorting the market. When they want to do that that bearish stop loss trap, they have to short the market for a couple of seconds. And if they're going the opposite direction with a bull trap, they got to dump a large amount of money for a couple of seconds to make the market spike. And now let's bring it home. The model that we're using, where we're using momentum, right? We want to make sure that we have enough momentum where we don't fall for the trap. The trap never happens. So I want you to see the visual. Let's look at this right here. The market spiked, right? So let's say that they put in a short. The institutions put in a short. And depending on where they put that short, because keep in mind, they have to decide how much money they're going to go into the markets to make the market spike down. They're putting a position in. The entry of that, they got to put that in. So they're risking a lot of money. Are you with me so far?
Yeah, got you, coach.
They're doing the same thing you're doing, but the opposite. You're putting your stop loss to make sure that you're not losing any money, and you know that that is the amount of money you'll lose if it goes into your stop loss. Well, guess what? If they're putting in a position for a stop loss trap, they're dumping $1 million to make the market spike. And there is more momentum that doesn't go into their trap. They've lost that $1 million. Do you understand?
Yes.
The same way you lost your money with your stop loss, they lost it with the stop loss trap. Now, I'm pretty sure they have an arbitrage somewhere in place. They probably have an arbitrage somewhere in place, but I want you to understand, every single major trading event, they have a trap in place. And every time that we get our perfect trade, every single time we get our perfect trade with that strong momentum, the institutions lose that money. Did I blow anybody's mind?
Whoa, okay. They losing. Okay.
The same way that you're using your stop loss,
Yeah.
it's going back into your stop loss, right? Well, they put in an entry position with their millions of dollars.
Right.
And the market never spiked. It never went the way that they wanted because the momentum went the opposite direction. And what happens, because when you execute the trade, it executed their trade. They're now in the trade. And if they put in a short position and the markets continue to go up,
right,
they lost money on the
lost
short.
That money, right? Absolutely. But I would think they would be smart enough to
arbitrage.
Know that it's going to be strong enough momentum that if they set a trap that day, they're going to lose out.
But think about it. Sometimes they don't. And because think about our analysis. Our analysis define those opportunities that don't match the sentiment. They're trying to create the sentiment. They're trying to control the sentiment. They're trying to control all of the people in the charting. But our form of trading, we're not a part of that. So if we can find out those rare times when the markets are going to give less than expected, more than expected, other than expected, it's going to give us that strong momentum. Their trap is never going to go into their short. They lost that money. Doesn't make sense.
Yep.
They playing out here. Wicked game playing, man.
But
seems like the contrarian always wins.
Exactly. But I want you to see it from the perspective of the institutions. They're going through the same stress and anxiety. How can I position this trade where I don't lose as much money on my stop loss track? They're not worried about the stop loss. They're worried about making sure that there's not a momentum that's gonna cut their legs off. And I'll tell you what it is, what it's based on. Because if they put enough money in the markets, because that's what it is, and I'll break it down in simplest terms. There are more retail traders than their position. So if they put in $1 million for that short, and the retail traders or even lower end institutions, maybe the position is now 3 million. The 3 million is going to offset the 1 million. So they just didn't put enough money in. But if they had put in 5 million on that short, and everybody in the markets put in the same 3 million, then the short's going to go through. Because there are more short positions than long positions. Does that make sense?
Mm-hmm.
So they just made the mistake of not investing enough in the trap. And believe me, they're limited on how much they can put in because there's the ROI, right? There's the ratio of how much they can invest on how much they can get back. So if they're sticking to their ratios, they're gonna limit that stop loss trap to a certain amount of what they're looking to make. And believe me, if they overextend it, they got to answer to their pit boss. They got to answer to their team lead. Why would you put that much money in that trap? But I want you to see it from the perspective of the institutions. They're going through the same analysis that you're doing for your stop loss. They're doing it on the same level with the stop loss trap, with how much money they're going to invest. But I promise you this, a lot of the institutions will have an arbitrage in case they do, because it happens so much, like 2 or 3 times a day, 9:30, lunch at 2:00, and then the 4:15. So literally, I promise you, they have some kind of arbitrage in place. But I at least wanted you to see it from the perspective that they are literally doing the same thing you're doing with your stop loss. They're doing it with the stop loss trap, and they're losing that money if the markets are giving the high momentum that they did not expect. Make sense?
Makes a lot of sense. Is there a way to potentially calculate how much they're willing to risk based on? No.
You don't need to. You don't need to, because we're getting our perfect trade. We can care less if they're making or losing the money, but I at least wanted you to see that it's not just you. You're not alone in that anxiety, that worry, that uncertainty. They're going through the same thing. The only thing why they don't have the same level is because they're arbitrage. They have another trade in to offset it. They're putting something in the options. They're putting something in Forex. They're putting a dual trade in on somewhere else. They're shorting the market somewhere else. They're putting a long position in somewhere else. They're doing some kind of a dual trade or arbitrage to kind of offset it. That's usually standard practice. But I at least want you to know that they have their version similar to what you're doing, that you're not alone. So every single time that you have your perfect trade, they have lost money. I love teaching this. What?
I love it. I'm just gonna say I love it. I love how smarting the odds make, beating the house.
And that's exactly what it is. You're beating the house. And they're willing to take the loss. That's what the whole house thing is. They'll take that because they know eventually, since they are the house, they'll make the money back.
Mm-hmm. So basically, you're saying that so many people get in at that point in time, even their trap, the momentum pushes it past their trap.
And that's what I explained in the roadmap. That's what I explained in the course material, right? You want to hide yourself in the momentum because I even explained it with the Apple stocks. If somebody comes in later on, if the institution comes in and want to short the market on the Apple stocks, it doesn't work because there's so many people buying the Apple.
Mm-hmm.
They're stuck in their position and they're losing on that trade because they put in a short position. Now sometimes maybe they're putting their short position in low enough, waiting for the execution, and maybe they're, they have a spread where it's not even hitting their short. But a lot of the times, and I'll tell you why, because they trick you. If you notice, it doesn't always immediately go down. Haven't you seen the traps where it'll trick you, where it'll give you a nice spike up first and then it'll go down?
Yes, I've seen that too.
Yep.
Yes,
that's what I mean. They're entering in the trade above the short position, and then the market falls. The same thing happens when we do our momentum. Their short may hit first, executing and going and executing their short, and then all of these extra people come in 30 seconds later. 1 million people will come in 30 seconds later and then turn the market around and it takes off. putting them in a losing position. Because not everybody comes in at the same time.
Yeah, and that's kind of the thing that I worry about too, is just because of, for my size of account, I would have to stay in to get, let's say a $200 trade, stay in longer to get those points or whatever. So I guess in my situation, I'm thinking I would love to just do it shorter, you know what I mean? Where you're in for 5 points, but you need to like account size that's like $40,000, dollars to do that, and a large number of contracts. But if there's enough momentum, I guess you could get your 40 points. You know what I mean? If the trade is strong enough, that's kind of how we need to look at it, is that if it's strong enough that we could, hide in that momentum and get our take profit.
I love sitting back and just letting you go through the process. Let you walk through it on your own. Yeah, I love it. I love it because that's what it is, right? You come in like, wait a minute, that won't work. And then you kind of like, oh yeah, wait a minute. Because once again, guys, you have four different things you can change.
Yeah.
If you feel that that part's not working, increase the actual contract. Go up to the next level of the NASDAQ. Go up to the S&P micro. Try to get more points.
Mm-hmm.
If you don't have the capital, now I will always tell you that if you because I know this for a fact, I do it all the time. If you have a $3,000 account, you can go up to 20 contracts. Your margins will let you trade on the low end micro inside NinjaTrader. You can trade 20 contracts on $3,000.
Yeah. No, I actually went through. I did a spreadsheet of how that could work on the Dow, right? And it said safely would be anywhere from 12 to 24 contracts.
Yes.
So
you have the spread, you have the margins. You can do anywhere between 10 to 20, 15, 12. And like I said, you calculate up to 24. I know I've done it enough. I know 20 I can do. So you're safe at
and
20.
Also, I also told it too that I was setting my stop loss 5 points back.
Exactly.
Is what so it's taking into account that as well. So that's where that calculation is.
Because that's what's giving you a higher margin, because your stop loss is not eating it up.
Right. Yep.
But if you set that stop loss really close because you're looking for the perfect trade, it allows you to go up to 20 contracts with $3,000. And like I said, if you don't think that you can do the 20 contracts, leave it at 10, but now increase the amount of investment, maybe 1,500. Well, in your situation with 3,000, instead of investing 300, invest 400. So increase the amount of money, or go up the contract ladder to NASDAQ or S&P. And like I said, you may want to lower the contract down because your margin will be different on the NASDAQ and S&P. But that's why when you saw me on TikTok last year and I was showing you the calculator, that's what I mean. You got to put different scenarios into the calculator to see what your best investment is.
Got it.
And that's what this. No, go ahead.
I guess my second thing is, just with the placement of the stop loss, is that why you say, like, I guess you to basically enter at the strong level higher above like where the market currently is, so that way if it is, you know what I mean, you have a greater chance of it being a perfect trade. Because my next question was, okay, let's say you have the stop loss 5 points back, and it pulls back a little bit, and then now you're out. Do you just say, okay, I'm out and I'm done for the day? Or, is the better strategy to enter, like, I'm just making this up. The Dow is at 4,500. So you go much higher above that, like, let's say 45,100 is your entry point. And then you go, that way, you're kind of out of the range of it getting hit and triggered and you losing that money. You know what I mean? I'm just thinking, is that better to do that?
All right. So I'm going to give you 2 scenarios because I want to stay focused that we're still in the university and everything we talk about in the university is for economic events. So based on that, your stop loss is close. There's no need to factor in this and this and this, and you don't care. You want it to come back to your stop loss. Take your small loss, make up for it on the next trade. So that's the first thing that the advice that I'm going to give, and even what the scenario that Ben is talking about, this has nothing to do with your economic events. Keep that stop loss tight. So if it does fall back on a trap or something, you're out, you're good. Make up for that, for any of that loss on the next trade. But if you're talking about regular market, and once again, this is getting into the one-on-one, then yeah, you definitely have to factor in how much, you have to factor in how much now. I don't want to get too deep into this. I myself factor in, and I usually use Fibonacci numbers, and my default Fibonacci number is around 37 if the markets are not volatile. Let me make sure I'm using my right number. So I'll use a 55 if the markets are really volatile. But that's based on my capital, right? Mm-hmm. I understand that, that might eat into some people's margin, but I don't mind doing a 55-point stop loss if I'm trading on the fly, and I know the markets are giving me 300 points. And you saw my kill box. And when I showed you that kill box, my stop loss was at 55 because the market was giving me 1,000 points. It was giving me 1,000 points movement. So I had no problem with my stop loss being at 55. But normally, 8, 13, 21,
37,
Yeah, it is 37. I just want to double check. Sometimes I have brain farts. So yeah, I will use a 37 by standard if it's just regular market movement. But if the markets are moving really, really big, and I'm also giving you numbers for the Dow Jones. That's my default. I don't know if these same numbers will work in NASDAQ and S&P. You got to play with it, which is what simulation is all about.
Okay.
But I use 30.
Sorry. The 37 you're saying is a stop loss?
Yeah. Oh,
yeah,
37 points. 37 points behind your entry.
Okay.
And then 55 behind if it's a lot of volatility.
Mm-hmm.
And I still have seen the markets just run through my 55. And I kick myself, and it's gut wrenching. Mm-hmm. But that's the price to pay when you're trading on the fly and you're trying to get that high. That if you try to get 500 points, 1,000 points, you may have to risk 300 on the stop loss.
Right.
It's just the price of doing business. Does this make sense to everybody? Now, granted, you guys should not be doing that. That's why I don't like talking about it in the university. None of this should matter. Come into the one-on-ones and I'll give you a better explanation of how and why and when and all of that. But I'm giving you the blanket answer, but don't go out and try it yet. Go ahead.
So back to clarification though, when you got the event that you want and to jump in to 8:30, you're just jumping in even prior to that trap at that point. You're just going in on the 8:30.
Yeah, I like to get in at like 8:25.
Okay.
And I'll tell you why. Because even though it is a future market, and technically the future market doesn't close, it really does not start everybody going into the market. Everybody, the volatility going up, that usually happens somewhere around 8:20, 8:25. And I like to get it probably around 8:25. I want to be there before that 8:30 spike. Do not wait for 8:30. You missed it. So get in around, and I'll tell you why I say 8:25, because it may take you a couple of minutes to place the order.
Mm-hmm.
But if you're showing up at 8:28 thinking that you can get everything in, you may miss it. And I have done this where I missed it. So try to come at around 8:25, 8:20. Make sure you got all your levels. Make sure you have everything in where you're just ready for the spike at 8:30.
Mm-hmm.
And once again, we're always looking for that huge momentum at that 8:30. And then now we can use that as a gauge on what the volatility will be for 9:30. Keep your stop loss close. If it takes you out, no problem. But if it's a perfect trade, you're good. Any more questions? And this is kind of what I wanted to do today. I wanted to do charting. This is kind of a free day. I wanted to kind of do charting. So this kind of worked out to exactly what I wanted to do. Because I knew when I explained this thing, you guys would probably start asking questions about charting. But I know we're going to get into more charting as I get everything into the calendar. We're going to have a nice little 15-minute, hopefully a nice little 15-minute session where we can, show you the entry, exit. That's what the simulation is all about.
All right,
Any
question,
other?
Coach. Yeah. Let's say you enter the trade 5 minutes, before the 8:30, right? You have your stop loss at 5 points back. And for whatever reason, it takes that stop loss out before the 8:30 announcement. And once that 8:30 announcement hits, then it still goes up. Do you just wait for the next trade, or?
I think I misheard you. You say you take the stop loss off?
Yeah, I'm noisy with this traffic. No,
say it again for me.
Yeah, let's say you enter the trade 5 minutes before.
Okay.
You have your stop loss five points back, like you usually do. But for whatever reason, it takes your stop loss out before the 8:30 announcement, and then you see once the 8:30 announcement hits, then it takes off.
Well, I'll give you the solution. If that's happening, your entry is not high enough. You don't want your entry to be where you think where the current price action is starting. I've always said this, and like I said, when you come into the one-on-ones, you'll learn it. I never come in at market. That's the reason why we're doing a buy limit. You don't want to come in at market value. You want to put it about 5 or 10 minutes above where the current price action is. You want to always come into your entry. So put your entry about 5 or 10 minute points. And once again, you can still use a Fibonacci number, use a 8, use a 12. I'm sorry, 13. You can 13, use an 8 or a 13. When your entry, put, if you can't find a level for that entry or that 5 or 10 points ahead, I easily, that's always my default, guys. If I can't find a level, I'll use an 8, I'll use a 12. Sometimes I'll even use a 21, depending on the volatility.
I think that's what I definitely want to have it above. Well.
Yeah,
go ahead.
I gotta get that 101. I understand that, but I gotta get that 101.
I got you. So, what'd you say, Abena?
No, I said I think that's kind of like what I was questioning too. Is like you need to be above the action, because if you have it set close, and I'm thinking about this just even for economic events, right? If you have your stop loss 5 points, there, it could pull back, but hopefully if you put it above your, by the time it's triggered, it's already in the momentum and it's already going.
There you go. Now you're learning. Okay. So even with the economic events, do not use no market order. You still, because keep in mind, you already know that it's going to give you 100 points. You only need 10 or 20. So you have plenty of room to put that entry well ahead of current price action. Put it 15, put it 21 points. Use a Fibonacci 21. Put it 21 points ahead. Because if that market takes off, it's going to eat up to 21, go into your trade, give you your 10 points, and keep going. And that 21 points protected your stop loss. Does that make sense?
Got it, Coach. Because at that point, you're probably above a strong level.
You got
it. Right. Yep. So all the games are being played, kind of where the institutions are like, hey, let's play a game here where the entry is the current price. Yes. But when you get high above, it's like, oh, you're gone.
Now let me ask the question. I like how you guys process everything. So let's go over what you know. You may not know it. So let me ask the question. Why are the institutions playing at that level? Why have they decided to play at that level on where the entry is?
Because they know that the other traders, that's where they're going to place.
Who are the other traders? I need you to say the name.
The charters.
You got it.
The charters.
You got it. They're looking at that chart and they know where you're going to be. They know where they want to enter. They know. But here's a second thing. The majority of the charters are amateurs and they're using a market order. Get me in as soon as possible. And the institutions also know that, which is why you're using a limit order. You can put yourself and elevate yourself away from the herd.
Right. Yep. Yep. I'm back in my body now.
I love it.
I'm not in my head. I'm not in my head.
Now
Right
you
now.
got it. I love this university, guys. I am so glad I did this. So glad I did this. You guys are learning exactly what I want you to learn.
Yep, this puts all the confidence back into the framework fraternity, because all of this really the positioning that we put in, all this translate back into the framework fraternity, because once we get those type of results, we'll know how to make, the moves in our trades. So, it kind of takes away so much of the, because I don't want to get too bogged down with calculations. I want to, kind of feel it, if you will, with that momentum. So I like the 85, 99% probability to avoid those type of headaches.
Yep. Can you imagine just because it's executive decision? Like when somebody brings, oh yeah, we want to open, like think about a CEO in a restaurant or a retail store. Oh, we got 3 new locations for us to open our new store up. Here are the demographics, blah, blah, blah. And you just look at the overview, look at the bullet points, look at the final numbers. You're not going into that. You trust your team, right? Now, if you truly want more details, you can go into the 2nd and 3rd and 5th and 15th page if you really want to, but they just make executive orders. If everybody did their job right, okay, I see these numbers, I see the demographics. All right, now you are experienced, 25 years in retail and restaurant experience. So there's where that gut comes in. Oh man, I know the numbers may look right with this location, but I already know that my gut is telling me this and this and this. So that's what happens when you get those final reports from AI team. That gut feeling comes in. Executive decision. Let me go with this one. Make sense?
Yeah.
You giving me a 90%? Let me go with that 90%. I don't need to know the details. But we got to get to a point where we're hiring and firing the AIs until we have the perfect team.
Yep. Weeding out the bad employees.
You got it. You got it. The underperformers got to go. You showing up late to work. You're not willing to stay after work. You're not willing to show up on weekends. Sorry. So that's what we're doing, guys. We're building our team, building the perfect team so we can build the perfect trade. And I love that. We're going to use that as our tagline. We're building the perfect AI team so that we can build a perfect trade. Any final questions on this? I love it. I love it. I love it. So this weekend, homework assignment. Everybody should be entering in those 4 trades, right? We got the 8:30 and the 9:30 for the housing starts. We have the 2 o'clock Fed announcement, and then the following day. So it's actually 5 trades. Sorry, it's 5 trades. We have the 8:30 and 9:30 for the housing starts. We have the single Fed announcement at 2 o'clock. And then the following day, we have the 8:30 and 9:30 sentiment from the Fed. And you tell me that you can't make enough money in that 24-hour period. And the best part is we got the weekend, right? So you guys may want to also go into your AIs, do anything like that. But that's what we're going to be doing Monday and Tuesday. We're going to finalize to make sure we're going to go inside of our spreadsheet. We're going to enter in our strategies, everything. I might even come back to the charting, try to find some entry and exits. I don't really know how I'm going to do it, but I do want to show a lot more in the TikTok to kind of give people an idea of what we're doing in the university. So last opportunity, guys. Reach out to me. I think I have something scheduled with one or 2 of you either today or over the weekend. But let's get those little phone calls done, get everybody locked in on where they are. All right. My ideal place is obviously for you to be in the fraternity. But if you only have to come into the regular university, I still would rather you do that, because I promise you, the AI did not exist 3 weeks ago. And I still had a foolproof system. You just got to do a little bit more legwork. So I don't want you using this as an anchor that you're disappointed that you're not getting the AI. It didn't exist 3 weeks ago. And I was doing well with it. My students were doing well with it. So don't think that the AI is a deal breaker. It's not. You just got to go out and look up the news. And then here's the other thing. Pay attention to this. You still have the processes. You can still use the echoes to find the echo, to find the sentiment. You know, you still have your core process where you can go over the let me go into the here's the final thing I'm gonna do. I'm gonna go into the actual workbook, and I'm gonna give you the 3 processes that you can use if you are a university student. So give me a second. Let me show you. Yeah, the core, the prime, and the echoes. The core, the prime, and the echoes. I also want you to check into this as well, because this is economic indicators. So echoes, sell, prime, and scope. So I'm gonna do people a service, because this is on the top tier. But because you are inside of the university, if you reach out to me, if you are in the Cub or you are in the King Cheetah, and you do not find these acronyms in your workbook, reach out to me. I will give them to you. Let me say it for you again. If you are in the Cub or the King Cheetah, you should be taking notes right now and writing these down to see if they exist in your workbook. But if you find these, if you do not find, and it's possible you may not find the prime, you may not find the sell. Those are the 2 that I'm not sure that you have. But if you are a university, you are a tuition, and you are in the Cub or the King Cheetah, I will personally give you the prime and the sell. Does that make sense?
Mm-hmm.
Because I want you to have everything you need, that you don't have to worry about, oh, I'm missing out because of AI. There's a reason why I gave you the processes. You can go through the analysis, you can go through the economics, and you'll still get the same high-level results.
Man, it's been here the whole time, and it's amazing how it just falls in place for the AI. It looked like it was actually created.
Doesn't it though?
For
exactly.
This, like,
yeah,
you just created it afterwards, and now you're trying to take credit for it. You don't have a date on here, so you could be easily just just lifting this and making it your own.
it's like he came from back from the future, back to the future.
True
statement. But this is that other factor when I say I get goosebumps, because I know that once we start implementing these things, and let me give you another example. Let's go back to the spreadsheet. This weekend, remember I said I'm creating 2 different spreadsheets. So inside of this area, this is going to be for your initialize. So your psychology. I'm going to put in 3 different acronyms for your psychology on process 1. I'm going to put in your economic events your organize. I have a couple of organize for like your team, like you find out your investment, all that. So you're going to organize so I'm going to have some a drop down of organize processes, and then process 3, 4, and 5 are going to be your analysis. Does that make sense?
So you're trading the trading style, and you're putting psychology where process number 1 is at.
Yeah.
What you're gonna put, like the biases or something like right there?
Let's go back to the thing. Let me show it to you. So I'm gonna put in So like here, your trading capital is safe and cash. That's going to be in your organize.
Got it.
Because you're organizing your money. But the beacon and cheetah are going to be in your psychology.
Oh, the acronym. Okay, I see. Got it. You placing the acronym.
So now when you go to your routine, that little section of your routine, the same drop down will be there. Which one are you choosing?
Got it.
And then now for the organized, you're gonna have this. And like I said, I might find some more dealing with organized. I might create some new ones. Like I said, when I'm in there this weekend, if I feel that you need something more, I'm already there. I might be able to create some other acronyms. I might be able to use have we used time? We haven't used the word time, right? So if I want to do something for scheduling, organizing, I might use the word time and create an acronym for that. Either way, and like I said, I'll let you know. And even in the future, I might add some. But what I'm looking to do is add at least 15. I'm not trying to do all 40 right now. Over time, and maybe for like the 3.0 for 2026. But for now, between now and the end of the year, I at least want to put in these 15 that you're going to need immediately. So here will be in your initialize. This will be your organize. The analyze will be your economics. So all of these will be your analyze. The darts and the arrows are also going to be in your organize, because this is all dealing with allocation.
So we can actually look at these as framework prompts. That's practically what they are.
These are also AI models. Because you already saw me put in the echo.
Yeah, I'm looking at Beacon. I can't wait till we get to the Beacon.
Yes. Because here's the thing about the Beacon. If you create the prompt right in Beacon, your AI is going to give you meditation exercises. It's going to give you affirmation exercises. That is my evil laugh.
I got this weird vision where we got these tubes coming out of our heads into these machines with that. So I'm gonna leave that alone right now. But I like this because I don't like doing the whole math part when we get our levels and stuff. I like to just get in there, feel it, get in there. 5-10 minutes. I can do 20. I can do dual. Oh, this is a power trade. I can just go in there. I don't want to have to, because I'm not the sharpest tool in the shed. I know that. So I don't want to be bogged down with too much, just me. I want to really get these prompts to where I can kick out the 85, 87, 90, probability. That's the only way that's going to really push my confidence to where I don't have to really drill down on those math parts.
Now, somebody posted here's the final thing we're going to talk about. Somebody posted a video yesterday. There is a guy that I follow on TikTok who all he talks about is AI. And somebody posted a video about him. I don't know his name. So go back to the student room. I think it's there. I'll go back and check to see if it's in the student room. If it's not, well, you know what? I'm not going to post in the student room. I'll post in the university. So I'll go back and post that video in the university. So basically what he said is that Claude just came out with something in their plus, their premium package, where the Claude AI can do spreadsheets.
What do you mean? Like you can tell them how you want things to calculate, and it will just do it for you. Wow.
And we're dealing with spreadsheets, right?
Yeah.
So
is
think
that
about
where you're going next? Yeah.
Truthfully. And remember I said I was trying to make a decision on whether I was going to use Claude or Gemini. That is a huge level on Claude.
Oh wow.
Because once again, building these kind of things, and then if it does have that level of processing power for spreadsheets, what else can it do for some of the AI models that we're trying to build? So, my thinking is that we're trying to get to a point. I'm going to reiterate this. Let me give you an example. If I put in Cheetah. Cheetah is your critique, right? Every single one of this is going through Cheetah qualities to make sure that you're on point with all the things that you need to have in your trade. So if you were to download your performance tab, let's go back to the spreadsheet. If you were to go all the way over to your track record, and you are critiquing yourself over here in the performance review, can you imagine? Because this is Cheetah, guys. This whole thing is Cheetah. So if you were to create a prompt for the Cheetah, and then you downloaded just this tab, right click, you can download just this one tab, or you can duplicate the spreadsheet and delete all the other tabs. But either way, you can submit a spreadsheet to the Claude, and then you can specify, go to the track record tab, or you can just copy it out and put it in a document, whatever it is. But either way, you can take your performance review, and then but based on the prompt that you give Claude or any other AI, if you're going to use a document, and then you take in that Cheetah process, and then you're allowing the AI to critique you on things that you can do better. It's going to give you future assignments on what you can do better. Do we see the power of this? Maybe you can't figure out what you're doing wrong, which I already told you to reset, but maybe you want some more specifics on specific things that you can do better. So I'm giving you an idea that at some point when we bring in those kind of processes, you can have the AI critique your performance and then give you suggestions on the things you need to work on. It'll even give you websites that you can go study at. It'll give you, give you this, give you that. Try this out. Try this out. Try meditating. Try drinking green tea every morning. I don't know what the AI is going to give you. But this goes above and beyond just the execution of the trade. Because we're factoring in the psychology and we're factoring in the performance. The psychology at the beginning, the performance at the end, and everything in between. And there's an acronym for every single one of them. There's an AI model for every single one of them. And as we said yesterday, it's the power of that AI model is the prompt. The prompt is the metrocosm. The prompt is the brain. I guess that's a better way to say it. If an AI needed a brain, your prompt is the brain. Or at least the brain.
We're building the brain
stem
out from within.
Yeah.
Yeah, we're building it out from within out with the information of the prompts and such.
Yeah, I would call it the brain stem because it already has the brain with all the information. But creating the brain stem is going to give it access to the rest of the body. So that's really what the prompt is. You're creating the brain stem that goes into the body and gives it all the commands that it needs.
The connection, got it.
The connection, there it is. So brain stem would be a better analogy.